Yeah, the market put it off like parents having to put together a bicycle on Christmas Eve. It got all the work done at the very last minute. It had been enjoying a nice uptrend all during the summer, even though the seasonal pattern was pointed downward, and then at the very last minute realized, oh shoot, I'm supposed to be over there, and we got the outcome we saw on Wednesday.
So does that mean, as we look at a chart of the seasonal pattern in blue and what the Dow's done so far this year in orange, what does that portend for the fourth quarter?
Well, we're transitioning now into the bullish phase of seasonality. There's going to be a little bit of messiness with this transition as we try to fit in an 800-point decline all in one day, and the market takes a little bit of time to digest that. But we're now transitioning into bullish seasonality. We got positive liquidity should be coming back. We'll be looking for confirmation of that in terms of strong breadth data and return of the right sectors doing the leading. But it should be a worldwide return of liquidity lasting until a top due in about late April of next year.
Mike, what do you make of the action so far this morning? Dow is positive. Now it's down 150 points. Yeah. NASDAQ positive. I mean, it's really all over the place.
I think it's characteristically apprehensive after a shock like yesterday. I mean, I think when you get more than the 3% one-day move, it was a pretty violent kind of catch-up effect of the overall indexes to what's kind of been happening below the surface. So I do think it makes sense. You're a little bit tentative right now. You've widened out the bands of what seems like the market's kind of trading behavior because, of course, where do we go? 3 months or something without a 1% move, and then we get this big bite in one day. So I'm not surprised by it. I do think you're in the game now of evaluating the tactical indicators. Are we washed out enough? Yes, we look kind of oversold, but have you actually seen the outperformance by the average stock that kind of let us down here? So I think that's the kind of
What sort of headlines are you looking for? I mean, we got the fact that Xi and Trump are going to meet maybe at G20. I would think that would provide some hope.
I think one of the bigger headlines we got is the CPI and the fact that the bond market got a little bit of a rally out of that. And so to me, something that kind of changes this very kind of high momentum narrative toward rates are rising, yields are flying, stocks have to come down in that environment. I actually think we can kind of unwind a little bit of that.
Tom, repatriation. We just talked to Kudlow a few moments ago, talking about the levers that the administration has pulled to bring us this economic boom. And we got it. I mean, we definitely got a spike in repatriated profits, but then we got a bit of a fall off. What does that mean?
Well, and that's the best explanation for why the U.S. stock market has done so much better in 2018 versus the rest of the world. We had a whole bunch of money coming out of foreign banks and coming back into U.S. banks, courtesy of corporations doing repatriation. It was in the first quarter of 2018, it was a rate of about $85 billion a month. So we basically had QE3 in terms of the amount of money being repatriated in the first quarter. And it fell off a little bit in the second quarter. We don't have the data yet on the third quarter. It's going to be front-loaded. And at the same time, quantitative tightening, or QT, is catching up at a rate of 50 billion. So those two things are going to collide, and we're going to have to do a balance of forces equation to see how much money coming in versus how much money getting consumed by the Fed, is what that's going to equal to for the stock market. But yeah, that's the best explanation. I do look for the positive seasonality to outweigh the negative seasonality that we're just ending, and I look for liquidity to start picking up, but we need to see confirmation of that.